this is a good time to explain what the stock market really is, right? Because the stock market is not the economy. It is one of many indicators we use to figure out what's happening and what people think is going to happen because investors buy stock for a share of a company's future growth. I think of it more as a sentiment gauge of how people are feeling about a very important section of the economy, and one that we have the clearest data on and insight into. The stock market essentially tracks the profit growth of the largest companies in the world. And the main way we follow it in the US is an index called the S&P 500, which tracks the value of the 500 biggest, richest US companies. Now, that's a very small number of companies relative to the millions nationwide, and they only employ about 20% of the US workforce. 99% of US companies are small businesses, and at least half of the country works at a small business, but we don't get great data into them, right? Into the small business, what they're doing. Well, every company on the stock market is required to release its full accounting every 3 months. So we can track them, invest in them, make money off these big companies a lot more easily. So they get a lot more attention. And they used to represent the broader economy a lot better, but decades of corporate consolidation, you have more sales, profit, market power concentrated into a few companies. And you can understand the divergences that have happened, why the stock market is at near record highs while personal savings rate is near record low, small business sentiment is near record lows, reporting falling sales and profits for years. And the past few years have favored companies with big profit margins who could handle huge cost spikes and the pricing power to maintain their market share at these high prices. And the market is even more concentrated than it has been before. The S&P 500 index is weighted by size, and the biggest 6 or 7 tech companies, Microsoft, Apple, Google, Amazon, Meta, Nvidia, are so big relative to the biggest companies in the world that they make up 30% of the S&P 500 alone. So the other 494 companies make up the other 70%. So the success of big tech, enthusiasm around AI has inflated their profits and their stock prices, and thus overall stock values, and those dominant stocks have pushed up the overall stock market index this year. So what happens to big tech companies affects the market a lot. Even in daily life, those companies are very influential, but they are not the economy as a whole, right? So the stock market is very critical to watch and understand, but it misses a lot of the human economic experience.